Good morning, traders. Gates W. Adams here. I am your host, and welcome back for another episode of the Trader Bacon Show. Now, as we talk about evaluations and funding and some of the stuff that we talk about pretty frequently on the show, what we've seen is a lot of people will tend to overthink the whole evaluation process. And today we're going to take steps to demystify the process, simplify it, and put it in terms that might help you take that step forward towards passing that next or first evaluation, depending on where you are. I have as my guest today, Eric from Major League Trading, and he has put together some thoughts and ideas that will hopefully help you bring home the bacon.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded, paid, and bringing home the bacon. Are you ready? Because the Trader Bacon Show starts right now.
Eric.
What's up? How's it going?
On, man? Hey, thanks for hanging out with us today.
Yeah, thanks for having me on.
Absolutely. So, looks like we've got pretty cool little background back there. I love that. That framed poster in the back, the $100 bill, man. That thing's awesome.
Yeah, it's actually it's an artist named Michael Goddard, and I've got 7 pieces of his. So
everybody's got their favorites, right? Van Gogh, Goddard, who knows? So, man, Major League Trading. Tell us a little bit about what Major League Trading is.
Yeah, so Major League Trading is a trading education company. So I've been a full-time day trader since July of 2011. And in late 2014, I started MLT just out of people reaching out, just friends and family mostly, from seeing what I was doing on Facebook. And that's really what sparked, MLT in general, was just people wanting to know, like, hey, can you, every time you meet someone, it's like, oh, I'm a trader, which I stopped doing that, by the way. Like, if you meet new people and you tell them you're a trader, it's like, hey, I got 10 grand. Like, what's the best thing I should buy right now? So that's really what kind of sparked it. And it's grown from there, over the past few years, and, focusing primarily on just futures and options. And it's been good. I can't complain.
Well, one of the key components of being a trading educator, of course, is being a successful trader. So tell us a little bit about your journey. What brought you into trading in the first place, and how did that look for you?
Yeah, so it's a really interesting story. My parents owned different businesses growing up, and we were always traveling, back when, if you remember Beanie Babies.
Okay.
And so we actually sold a ton of Beanie Babies and, different knickknacks and stuff like that. So we were always traveling, and I always saw, McDonald's, and everyone drove Fords and Toyotas. And I'm like, okay, cool. We own this one store, but like there's a McDonald's everywhere. Like, who owns those? And that's really what got me interested in, learning about the markets in general. And I was able to kind of negotiate a deal with my dad when we built the house that if we ever sold it, I would be able to take, a portion of those profits and roll it into the markets. My parents were never, like, they owned 2 stocks, and that's just because they used to work for the company back in the day. So it was not their forte by any means. But yeah, so I was able to take that when I was 14, open up an account in my dad's name initially, obviously, back in the original days of Thinkorswim, and then haven't looked back since then. So what
was that? What was the first buy? So you had this little quote unquote windfall, if you will, from the folks. What did you start off with?
So my very first purchase, so I got 2 grand when we sold the house. We lived there for like 18 months. It was supposed to be our forever home, sat on some acreage. My mom designed the plans, the whole thing. So I didn't think I was ever going to get that money, first of all. And then when I did, I got 2 grand and I put it in the account. And the first thing in which I bought was Exxon. So I bought a couple shares of XOM. And this is how fresh and new I was as a 14-year-old. My account was instantly down $10. And I'm like, well, the stock's like still right here. I didn't realize the $9.99 in commissions was like an actual thing back in the day. So yeah, that was my initial start, and like, the first loss, if you will, of $10 back in the day, which cost me $10 to get out.
Right. Yeah. Well, $10 at 14 is a little bit of a chunk of change.
Yeah.
So you started off buying some shares of stock. What what did you do from there? How did that progress into options and futures for you?
So, a funny story. My mom was actually able to get me a sit down with Warren Buffett a couple years back. Well, actually, in February of 2011, so 12 years ago now. And so I had been trading for a number of years, kind of leading into that, and obviously putting in capital. So I was an electrician, saved up a fair amount of capital. I was over the PDT rule. I was day trading individual equities. And then from there, I started seeing like, okay, cool. I'm using, $25,000, $40,000 worth of buying power, but with options, I can do it for like $3,000, right? Like the same position. Of course, I did the normal thing where I did some $20,000 options positions that were a little too volatile at the time. And from there, obviously that led into, that taste of volatility and return led into futures. And, the fact that I could take a small portion of my capital, put over there, not have to be susceptible to, the PDT rule. They were 24-hour markets. So of course I was, staying up trading the 6A, the 6C, all that stuff at, 11:30 midnight.
Right.
Did that whole phase for a while. And then from there, I've just found a really nice rhythm with just sticking with futures and options, kind of, back to the roots, if you will, with that.
Wow. So it's been quite a road. Now we'll talk a little bit more about the specifics here in just a few minutes, but when you started figuring out that, okay, buying a stock is one thing, but when you're talking about options and futures and the volatility associated with it, you need a specific strategy. So how did you start to learn what ultimately has become your strategy?
So I had a mentor early on that still trades and actually is in the MLT Discord with me and streams every single day. He's an older gentleman. He was retired, learned how to trade. And then luckily enough, I ended up meeting him through meetup.com. He was hosting just a traders get together thing. And we kind of kicked it off, and he saw, me as a younger kid, and we just kind of, hit it off, took me under his wing. And he really taught me trend and candles, buy setups, sell setups, all of that stuff. And I was able to take that and kind of add my own flair to it, if you will, that turned into the strategies now, which is just two things, which is divergence and then levels. So when we show charts, I'll go a little bit more into that.
Okay, cool. So ultimately, the strategy itself, and I think that this is something that traders tend to learn fairly quickly. The strategy is great, but a strategy usually takes maybe a couple weeks, a month to really get the mechanics of. Let's talk about the psychological side of trading. What have you done to basically meet and beat the psychological challenges that come into play?
So the first thing I think is, honestly, you have to have some sort of routine. You have to have some sort of discipline. And I mean, whether that's, like if you think about it, just making your bed every single morning, right, is, hey, I'm doing the same thing over and over. And it ultimately comes down to the same thing, right? When you see your strategy, when you see your setup, I relate it to like taking your strategy or your setup out to dinner, right? Like if you picture it as a female, like you want to know, like, oh, what do they like for their appetizer? What's their favorite drink? Like I can see that. I know what that is. And I like to think of things in analogies. So for me, it's like, hey, if you do A, B, and C, like, all right, we're going to have a good dinner, and you're going to treat me well, right? So that's the way I look at the setup. And it works. So in addition to that, I created kind of like a cheat sheet. So I create a morning plan every single day. In addition to having that routine and that discipline, this tells me what I can do, and then also what I can't do, which is sometimes even more important,
Sure. So what determines your plan for the day, considering, so you say it's not the same every day. What makes Monday's plan different from Tuesday's plan?
So just overall market sentiment, where are we at in terms of trend and just analysis, right? What are the higher time frame pictures telling us? For the last 4 or 5 weeks, we've been essentially straight up until today, which was a big trend shift on a smaller time frame last Thursday that kind of set this up. So the main thing is like the trend is your friend until it ends, right? And as hard as it was to still continue to go long up until last Thursday for the last 4 or 5 weeks, every short position I took until that point, like wasn't working, like small shorts. So it's like, okay, well, let me just continue to do the things that are working and follow that trend.
Gotcha. Okay. So we're teasing around it, obviously. And so why don't we take a look and see what things look like for you? And while you pull that up, T Squared asks, you mentioned that you do not tell people that you're a trader anymore. What do you tell them?
Oh, so I make up like tons of different things. I've done everything from one time I said that I was a candlestick maker, so like actual candles. So yeah, I've done anything and everything. I've used the line of like, oh, my wife has an OnlyFans type of thing. Like I'm just a stay at home. It depends on the situation. So yeah, it's kind of up in the air. I kind of feel out the person and then see what it is.
Got it. Well, we're about to jump into all of this, but first of all, for all of you guys watching, we are going to be giving away some evaluations, and I tried to post the link, and the link failed to post. So we're going to try to get that up there. There it is. There it is. Thank you. So make sure you get your information filled out on there. We will be giving away 3 evaluations. Anyway, all right, Eric. So let's take a look and see what it is that that makes a trade for you, and show us what you go through in this process.
Yeah. So right now, what I have up that you guys can see is what I call my 4 grid. So these are just the 4 main indices. So S&Ps, NASDAQ, Russell, and Dow. And what I'm looking for on this is, like I said, secondary. So I have divergence and levels, which are going to be these lines across the screen here, the horizontal lines. And what I'm looking for with the divergence combined with levels, that's the A+ setup for me, is when we can see like the morning, we push up here in the 950s out of the S&Ps, and you'll see, S&Ps are pushing, Russell's pushing, Dow's pushing, but at the same time, like NASDAQ's actually making new lows. So NASDAQ's telling us like, hey, there's something off here about this rally from the other markets, right? It's not doing what the other markets are doing. So for me, that's saying, and we're under the level here of 850, 875. So that's telling me like, hey, there's some sort of weakness in here. Like markets don't actually want to go higher, or NASDAQ wants to go lower. And then we've got the same thing actually setting up now to the downside, where, NASDAQ, S&Ps have pushed down, they've made new lows, and the Russell and the Dow are holding. So that's telling me that at the moment, Russell and Dow are the stronger markets, S&Ps and NASDAQ are weaker. And my game plan right now is that I think we make a move down into 15,660.75s here out of the NASDAQ. And if that can happen with the Russell and the Dow still holding, right, then I think we have room all the way back up here to 16,088.75s, right? So it would move from essentially one level back up to the next level, here out of just the indices. So I'm looking at those 4. I'm trying to find those moments in time where one of them is standing out, doing something that the others aren't, and then be able to take a position from there. And again, I have different triggers and other things, obviously, in addition to that we can't cover inside of a quick couple minutes. But that's the gist of it. And like I said, I've shared this a ton of times. I've built the custom indicator here, these red and green arrows to show me when those moments and times are happening. And not every single signal is obviously created the same. I want that pattern. I want the levels there. I want a little bit more than just the signal.
Right. So not just blindly following, but at least having a better idea of what's going on surrounding it to make sure that everything is kind of in confluence.
Correct. And when we get like super strong trends, like the Russell had an insane move on Friday here. We went from basically 1800s to 1860s. Like I'm not interested in counter trending, a short in the Russell when it's got insane strength like that, right? But if you go back and you look from last Friday when that Russell made that move, you can see that the NASDAQ actually comes down, makes those new lows when the Russell and the Dow are not. And that's a divergence. That's telling me like, hey, now the Russell being the strongest, let's look to see if NASDAQ is going to give us the trend here, and we can get all 4 markets moving in one direction. And you'll see right here, as I put my cursor there, NASDAQ is the only one making new lows. That stands out. Obviously, we've had a good bullish trend over the last 4 or 5 weeks. Let's take another long.
Right. Okay. So in a quick nutshell, you've got all these levels printed up on there. what determines a level for you?
So for me, I use a very specific setup for levels on the hourly chart.
Okay.
And so it's much different than the traditional like marking wicks and the typical support and demand. They're very specific things in which I want to see from the chart, like what it's done in order to identify the level, right? Not just that we bounce from, and there's a big bottoming tail or a big topping tail or anything like that. I want to see that we did something specific inside of that data to identify a level for me.
Got it. And this is something obviously that you would share with somebody and as they're learning the bits and pieces of your strategy.
Correct. Yep. It's again, like I said, I got levels and I got divergence. That's as simple as that.
As I'm sitting here looking at 4 charts, those are 4 charts you can look at. I know my charts in particular, but a lot of other people's charts, there's what a lot of people refer to as noise. And of course, everybody's got their perspective on what information is valuable to have on a chart, and we all learn to trade our own way. But one thing that really stands out to me on this is how clean and simple this is. I mean, it's just one of those things where it's like, okay, there's not a lot of mental processing to go through when you're looking at this.
So that's 2 things in which I'll say back to the psychology piece is like, when you have a good strategy, your psychology kind of follows in suit, right? Like you don't have to overthink it. You don't have that analysis by paralysis of all these different things. RSI tells you one thing, MACD tells you another thing. So that's one piece. And then the second piece of that, when it comes to just noise and charts and indicators, is there's one common denominator when it comes to any sort of indicator in which you have, which is just price. Right? It doesn't matter whether it's RSI, a moving average, MACD, Bollinger Bands, Keltner channels, whatever. It's all based on price, right?
So with these fundamentals, and obviously, there's more behind the scenes here, but let's talk about the concept of passing an evaluation. What do you think it is in terms of a trader getting into the world of being a funded trader for the first time? What is it that they need to know that's going to help them pass their evaluations and move into the state of being a funded trader?
So a couple of things with this, and we talked about this the other day, is like one of my students has done really, really well, and they had a 6-figure month this year through Apex and the evaluations. And in sitting down and talking with him and other students, it's the process more than the profits. Mm-hmm. When you focus on like, hey, I've got a 50K eval account, I've got to reach the 53K threshold, and it's like, okay, let me put on a 5 lot, right? When you look at that from a notional value, like it's huge, right? The S&Ps, the NASDAQ, like, they're not small contracts by any means. So I think a lot of people end up trying to play the game of passing the evaluation accounts to get to get funded essentially, without really knowing what that next step is, right? The things in which you do to pass an evaluation isn't going to be, unless you do it the right way, isn't going to be the same thing that gives you success in a actual funded account, right? So you need to treat it like it's real. And at the end of the day, recognize like, hey, if I have to trade the micros over the actual minis, which I hate that is technically the way in which that's phrased, then so be it, right? Like learn the actual process, and then the profits will come later.
Sure. Well, and I know, and again, myself included, I take ownership of all of the challenges I have experienced along the way. A lot of times we really just get caught up, and I want to pass the evaluation as quickly as possible so that I can be funded, and then I'll stick to my rules.
Yeah. How's that work out for you?
Well, we'll talk about that on a different show. Now, you know what? And it really, it is one of those things where I think these lessons are, they're definitely the most impactful when we learn them the hard way. But one of the reasons that we do this show is to help people learn them the easy way. There's definitely a million ways to do things. But one thing that is always consistent is what you do in the evaluation ultimately will lead to what you do in the funded account, which will ultimately lead to your profitability. If you remain consistent through those different pieces of the puzzle, then the results should be consistent as well. There's going to be obviously variations and whatnot based on market conditions, but over the long term, that's what's going to lead to a successful trader.
I agree.
In my humble opinion. Now, practicing what I preach, again, we're all at different places in that journey. And I think that's what makes this so exciting, is that we can actually see the end game before we get there. And there's a lot of motivation in that. You talked about a student that you were working with that had a 6-figure-a-month payout. Well, for not having to put up a significant amount of their own capital, that's unbelievable.
Oh, yeah.
Yeah. So
for double what I paid in commissions on my very first trade, you can start an evaluation account. You know what I mean? Like the barrier to entry is far less than it's ever been in history.
Sure.
Like you have such an advantage, meaning you as the newer trader than I had, 15, 16, 17 years ago.
Right.
And it'll still continue to be the same. And you're looking at a market that is extremely liquid, that one gives you the flexibility of time and leverage, right? Depending on whether you have a 9-to-5 job, it's essentially a 23/5 market. Mm-hmm. You have that super low barrier to entry. You don't have the PDT rules, and it's one of the most liquid markets in the world. Like, you push the button and you're in. You push the button and you're out.
Right. Yeah, a lot of the barriers, of course, have been removed, which is the whole reason that I think that we're starting to see a lot more traders, come in. Because, I know back in the day when I first started trading, the option was fund an account. You put in 5-10 grand, and depending on where you are in life, if you blow it, which most traders do their first go round, a lot of times traders don't have an opportunity to go round 2. Yeah. And you can take that same capital, you can stretch that out over literally years, getting evaluations until you figure it out if that's what it took. But the idea is to minimize that psychological barrier of, this is it. This is my one shot.
and you force yourself to have bad habits because of that, right? Like you're trying to take that 5 or 10 grand you put up and you're trying to turn it into 100. Right. And that's what's in your mind. And that's also partially, the thing that plays into the evaluation accounts is you see that dollar value of like, hey, I got to get from 50 to 53. And you focus on that as opposed to the actual trade.
Sure.
But you can learn that lesson a whole lot cheaper and typically a whole lot faster than you can when you put that 5 or 10 grand in an options account, for example, and then walk away with 0 or close to 0.
Right. Well, and I think you get the snowball effect, whereas if you fail an evaluation, there's that hard stop. You got to refresh and start over. That sort of puts that mental break on everything, and you're starting fresh at, call it 50K or 25K or 150K, whatever size. So psychologically speaking, I think that really helps not let that thing snowball into one after another, which I know for me, that has been a huge saving grace. So.
Yeah. And we're a society built on rules too, right? So it makes it a little easier. Like, hey, there's a speed limit. Hey, there's these laws that, you can't just go do certain things in which you want to do. And inside of the evaluation, it's the same thing. So it kind of fits with the norm as we're brought up in, listen to your parents, follow the rules type thing.
Exactly. And HTX, no, actually, they will not auto adjust anything. I would specifically go to Apex Trader Funding Support and open a ticket to just confirm that the actual question is being answered. But there's not an automatic adjustment. I think they just won't allow the position to enter if you're over leveraged, according to the rules of whatever size account you have. Now, Eric, obviously we talked a little bit about Major League Trading, but you've actually got a program that is specifically designed to help traders pass their evaluation, right?
I do. So I'm going to be finishing that up essentially this week. I've been kind of putting everything together with that, some examples and my own, going through getting funded, receiving my first payout and all of that stuff as well.
Okay, great. Now, if somebody wanted to take a look at that, is that something that they could get to from Major League Trading, or is there somewhere else that they should go to look for that?
So that's going to be through traderfundingchallenge.com is where that would be at.
Traderfundingchallenge.com. I'm going to see if I can real quick type that in there. It's not going to let me. I guess it doesn't let me put links in there. But But yeah, make sure you check that out. Also, you can follow Eric at Major League Trading as well, and get an idea of what all he has to offer. So Phoenix asks, what was the turning point for you in trading? So I guess that where the switch flipped for you, and you started going from learning how to earning.
Man, it's really the same thing. It's learning that process over profits. Coming in, I used to start off and kind of have this mindset of like, hey, there's 20 trading days, per month. Like if I can just make $200 per month or $200 per day, then over the course of those 20 days, like, okay, cool, I'm going to make $4,000 a month. That's going to be 50 grand a year. And when you do that, you kind of rob yourself a little bit of the fact that not every single day is going to be equal by any means. And really learning that process over profits and the patience, right, is just some days I don't take trades, right? If there's nothing there, then I'm not going to try and press it, right? If there is something there and it meets my criteria, and like I said, I can take that setup out to dinner, then okay, cool. Like we're gonna have some dinner, and then hopefully, obviously, then we're gonna have some steak, right? That's kind of my main. I like to eat a ribeye every single day, and if I can perform well and do the things in which I'm supposed to do, then I get rewarded and I get my steak every single day.
Right.
So
well, in your now, I think I can't remember if it was last week or the week before, but my guest made the comment that I don't take a trade every single day. And I know that this is something that a lot of traders struggle with. Again, I'm going to own my own on this one as well. There is that moment where we feel like I'm missing out. It's the FOMO, as I'm going to say, as the kids call it, my old man verbiage here. And there really is this psychological need to, hey, I'm going to take my time to get in front of the charts today. I need to take a trade. And the fact is, I don't need to take a trade. If the conditions aren't right, I need to make sure that I'm willing to pull back. And, it's so hard for so many of us, especially as we're, developing in this process. So do you have any advice as far as when to just say, look, this is it, I'm going to shut it down?
So I have a great exercise for this, actually. So I really appreciate that you brought that up. And it's simply this: is instead of actually pushing the button, take a week, which December is a good month to do it in, right? Take an entire week and not place any actual trades, but get just a piece of paper or a notepad and physically write down your entries. So you're looking at the chart and you're going, instead of clicking the button, you're going to write that down, and you're going to be like, hey, I'm getting in here, blah, blah, blah. Here's my reason, right? And then you get to sit and you get to wait and you get to watch it and you get to see like, hey, what is it doing? And then you go, okay, cool. Here's my exit. Let me write that down.
Right.
And at the end of the week, over a course of 5 days, you might have 3 to 6 trades that you were actually confident enough in the setup and everything came together to write it down physically on paper. So whereas on a normal week where you aren't doing that and you're just clicking the button, you might have 25, 30, 40, 50 trades. And you'll see that vast difference between, hey, here's me clicking the button versus, hey, here's me writing it down. And then it should click. Like you should see it.
Truly, truly valuable advice. And I love the idea of old school, real, legitimate paper trading.
It's legit paper trading
these days, right?
Yeah, it's the real paper trading.
That's awesome. That's awesome. I love it, man. Well, Eric, thank you so much for spending some time with us today. This has been a blast. I've definitely been very informative for me. As all of you know, I am on my journey as well, as I know a lot of the viewers are. And I just love it when we get these beautiful nuggets of information that say, you know what? Okay, I know what I do in my charts. I know what I do in this, that, and the other thing. But there's just other things that I can do to increase the quality of my mental game. That's what's really going to put me over the edge. So, man, I appreciate that. Check out Eric at Major League Trading and also at, what was it? The
TraderFundingChallenge.com.
Thank you. TraderFundingChallenge.com. Make sure to get that jotted down. Check it out. Sorry, I could not get that in the comments. We will be giving away the 3 evaluations. Check your email. The email should be out by the end of the week. And if you are a winner, you'll get that email and get notified on how to get all of that set up. Make sure you come back next week. We're going to have a great show for you once again. I hope you guys are enjoying the season. I look forward to seeing you guys on the next one.
Welcome to the Trader Bacon Show, where we showcase everyday traders that are getting funded,